Coming into today, I thought a couple of things. One, I thought the odds were that today was going to be a relatively disappointing day for the Bears. Reason being, yesterday has a tail below the bar, and therefore it was a strong enough gap down and sell off yesterday that the odds were we would get that the odds favor a second leg, but the tail below yesterday's bar increased the chances of buyers below it. And if it's obvious that it's a bad sell below, traders will front run it. But at the same time, yesterday is not a good buy above the bar, and therefore it increased the risk of sellers above, and we ended up forming a doji. Doji volatility is contracting, therefore getting smaller, and that increases the. Let me turn on the pointer really quick here. Volatility is getting smaller. So probably going to get a breakout in the next couple of days. So where do we go tomorrow? I think we may end up trying to test up into the gap and test the 2 days ago, the breakout point. But I still think we probably will try and get a small second leg down. 5,200 is around the midpoint of the range, and therefore that's a logical magnet for the market's test. Weekly chart, decent bear bar 2 weeks ago, and we got a strong reversal up last week, and now looks like we're forming an inside bar this week. Probably buyers below the low this week, and we'll probably try and get a second leg up. 5-minute chart. Coming into today, we had a decent sell-off and sell climax late in the day, and that increased the chances that today would have a lot of trading range price action. Bar 1, bear bar, tail below the bar in a tight bull channel, not a good sell, therefore probably buyers below. 2, follow through for the bears, but failed to close below 1, and that lowers the probability of traders selling below 1, increases the odds of buyers below it. 3, reversal up, good for the bulls, but bad buy signal bar above 2, and probably sellers above 1, probably going to go sideways. 4, inside bar, but forming a tight trading range for the bulls, second entry buy holding above the moving average. That's good for the bulls, but we still may end up pulling back here. 6, bull breakout, probably always in long, strong enough breakout, at least a second leg up likely, but really not all that clear. And then you can see what happened with 6. 6 pulled back, testing the breakout point. We're leaving the trapped bears. Bears who sell above 4 and scaling higher during 5 are able to avoid a loss. High 1 buy above 6, so there might be more traders selling above, but 5 is a strong enough breakout. We may get a small second leg up. And then we got 7. 7, doji, looks like we're not going to go a lot higher. For the bears, possible wedge. Yesterday's 79, today's 1, and then today's bar 5. And then you can see what happened with bar 8. 8, bear bar, closing below 7, good for the bears. We may get at least a small second leg down. 9, a doji, testing up to the upper third of bar 8 and selling off. Not a good buy above, and therefore increasing the risk that we break to the downside. 10, bear bar, good for the bears. 11, follow through, always in short, probably going at least a little bit lower. 12, another bear bar, still sell to close, but getting close to 50%, and therefore we may end up bouncing soon. 13, doji, overlap with 10, 11, and 12, increases the odds that we get a bounce. And then 14, bear bar, but failed to close below the 13 low, probably going to bounce soon. It's always in short, and therefore, not wise to be, I wouldn't be eager to buy yet, but it's probably better to sell pullback at this point. 15, strong enough bar, probably going to get at least a small second leg up. 16, follow through. 16, weak follow through for the bulls. Low 1 short, probably buyers below, but tight bear channel down to 14. I suspect there's not a lot of traders buying below the 16 low. And then 17, outside up, Doji, not a good buy above, so probably sellers above. 18, bear bar, closing on its low, probably going to go at least a little bit lower. And then 19, we have a bull bar. We may end up forming a tight trading range here. Bulls, they want to get the market to fall below the 14 low, which they probably will. And 20, bull bar, closing on its high. Good for the bulls, increases the odds that would go at least a little bit higher. So at that point, obviously, you have a lot of bears giving up. A little bit of a surprise, probably going to get some kind of second leg. Follow through 21, good for the bulls, probably buy the close. But you're buying in the upper third of the range, and therefore you may have to hold through a pullback. 22, weak follow through, but it is a bull bar. But with the tail on 20 and then the tail on 22, we'll probably end up pulling back fairly soon. Bear bar 23, follow through 24. Probably more traders buying the close than selling it, testing the breakout point 17. But 23 and 24 is a warning that something is wrong with the rally. 25, bull bar, but probably sellers above, not ideal. And then 26, testing the 22 close, increases the odds of traders disappointed up there. For the bears, they'll see it as a micro double top, and they want to break below the 24 low. But I think 20, 21, and 22 is strong enough that we'll probably go at least a little bit higher. 27, bear bar, increases the odds that we go at least a little bit higher, so probably buyers below. And then 28, another bear bar. Good for the bears, but overlap, and I don't think this is enough to undo 20, 21, and 22. 29, 3 consecutive bear bars. Probably more buyers down here than sellers unless the bears can get a strong breakout. And you can see what happened. We ended up going sideways for a lot of bars. 35, bull bar, closing in above most of the bars to the left. Increases the odds we'll get a second leg, but a tail above the bar, so not ideal. Doji, 30, 35. Good for the bears. Good for the bulls. Probably going to get at least a small second leg up. And then you can see 36, a bull bar, not ideal for the bulls. Probably getting high in the channel and therefore may pull back soon. 37, another bull bar. The channel up's tight and therefore you'll have traders buying and scaling in lower, but really not ideal. 38, bear bar, closing on its low, increases the risk that always in bulls will get out below 38 and therefore really not a good sell. And then 39, consecutive bear bars, probably sellers above and a second leg down, likely. 40, bull bar, closing on its high, probably going to go sellers above, scaling in higher, but the sellers may not come in until above the 38 high. 41, bull bar, good for the bulls, consecutive bull bars, probably going at least a little bit higher, but in the upper third of the range, really dangerous to buy there. And then weak follow through 42, and then bad follow through 43, probably sellers above, and we'll probably test near the 39 close. Bad high 144, probably sellers above. And you can see what happened with 45, 46, 47, bulls giving up. Tails 45, 46, 47, increases the odds of buyers below. 48, almost outside down. Bear bar, closing on its low. Probably not going a lot lower and we'll probably find buyers fairly soon. 49, bull bar. Little bit of surprise, increasing the risk of a second leg, follow through. On 50, probably buyers on a pullback. 51, bear bar, tail below the bar, increasing the odds of buyers below. And then 52, a bull bar. Not a good bar for the bulls. Therefore, probably sellers above, scaling in higher, but the sellers may not come in until above the 42 high. Follow through, 53, consecutive bull bars, 52, 53, may go a little bit higher. 54, bear bar. Not a great sell, but it's a reminder that we're high in the range, and therefore bulls may start looking to exit shorts pretty soon. You can see we started to go sideways, 55, 56, 57. 57, reversal down, closing on its low. Probably traders selling below it and selling above, but you can see what happened with 58. 58, instead of traders selling it, we found buyers. Bull bar 58, not a good sell, and therefore not a good buy, increasing the odds of sellers above. 59, consecutive bull bars, but multiple buy climaxes up from the rally from the 48 low, and therefore there's more seller. They're increasing the risk of more sellers above. 60, bear bar closing on its low, looks like we're going to pull back. And then 61, not a good high one buy. 62, a bull bar, but an inside bar late in a rally, forcing bulls to buy in the upper third of a tight trading range. Really not ideal. 63, bear bar closing on its low, looks like we're going to pull back. And then 64, closing bear bar closing on its low, bulls giving up, increasing the odds that we're going to get a second leg down. And you can see we sold off to the open of the day. 69, consecutive sell climaxes. 64, bad follow through 65, and then 66, bad follow through 67, 68, and then 69. It looks like we're going to get a bounce fairly soon. And you can see we basically went sideways into the close and got another leg down. For stop entries, do like those for stop entries. I thought it was probably okay. I thought the first credible stop entry, maybe selling below 11, but fairly tough. And then some bulls, they'll buy above 19. I don't think that's really all that easy. And then, the first. I thought the first credible, maybe easier stop entries. I thought selling below the 38 low, but what do you do with 40? That's a little bit challenging. Probably should get out above the bar. Maybe sell below 45. And then other than that, I thought maybe the easiest stop entries, which weren't all that easy, selling below 60, 63, or 62, or 64. Not a lot of stop entries for the bulls that were all that clear. And then limit orders, lots of limit order trades. Buyers below 1, buyers below 2, sellers above 1, sellers above 3, sellers above 6. I thought probably buyers probably below 13, scaling and lower, buyers below 16, buyers below 17, and then probably sellers above 24, 25 for a second leg down. I thought probably buyers below 30, 31 for a second leg up, probably sellers above 35, scaling and higher, sellers above 44 for a second leg down. I thought buyers below 50, 50, and 51, betting on a second leg up. And then up here, I thought realistically sellers above, even though we're getting a lot of bull bars. And then really tough here. There's really not a good sellers above location. Selling above 70, really too low in the range, therefore not ideal. And then, if you're really aggressive, maybe you trade this, but tough to do. Buy the close, sell the close. Not a lot of clear. Buy the close, sell the close. Maybe sell the close of 11, sell the close 12, but probably going to pull back soon. And then you can buy the close 21, but you're buying high in the range, and therefore, it's really not ideal. Better to buy a pullback. And then that really, maybe selling the close 64, selling the close 65, but not ideal. And that's probably it for buy the close, sell the close. Let me take a look at questions. Is it okay to not look at higher time frames and only trade the chart in front of you? Yeah, I think it's really dangerous to actually trade with a lot of higher time frames. And I think it's much more important for traders when they're starting out to just focus on one time frame, one market, one chart, and don't look at everything else. So if I was going to trade, this is how I would trade, just one chart. And I don't want to, maybe a moving average, but I don't want to care about anything else. Because what's easy, you can really get lost with all these other pieces. Why did you mention that 65 is sell to close? Isn't it bad follow through? Well, it's bad follow through, but it's context. Channels, you have consecutive buy climaxes on the way up, and I thought the odds were we would get at least 2 legs down. And even though 65 is bad follow through, it's following a bear breakout 64, and it's a bad stop entry above the bar. And that increases the odds that we're going to get a second leg. So even though 65 is a bad follow through bar, it's just a pullback on some time frame. Okay, question 57 and 60 follow through gave me a lot of doubt. So the 57 follow through here, I guess you're talking about 58, and then the 60 follow through here gave me a lot of doubt. Isn't that and maybe hesitate on the short. Yeah, that's common in channels. Channels, really common. You get a bear bar and then you get a reversal attempt, and the reversal attempt fails, and the bear bar still ends up working. Why did you mention that bar 65 is sell to close? I just talked about it. Bar 65 was sell to close because it's a bad buy above the bar, and therefore if I had to do anything, if I had to buy at the market or sell at the market on 65, I'm going to sell at the market. And you can see, looking at 66, I was not alone with that. It's breaking out below the moving average after a channel, and channels evolve into trading ranges. When you state probably sideways to down or sideways to up, do you mean trading range, then down after a big bear leg, or trading range, then up after a big bull leg? You say that often, so just making sure it's accurate. Yeah, when I say sideways to down or sideways to up, what I mean by that is I think the odds are probably going to go sideways to down, and therefore we're in a rally and we're high in a channel, and while we may go a little bit higher, the odds are probably going to go lower. Another example is here. It's probably going to be sideways to up. And what I mean by that is, basically the market's probably going to pull back, but even if it does, we're still going to be sideways to down. So when I say sideways to up or sideways to down, it's really a bias towards that direction. It's basically saying it's more of a channel. But I say that as a reminder that we're in a trading range. Channels are basically trading ranges. You can look at this and say, well, yeah, you're crazy. It's been a bull trend since bar 15. That's true. But when we add all the bars up and tally at the end of the day, we closed right at the open of the day, and therefore it's a trading range. So it looks like that is it for questions. As far as tomorrow, I don't think there's anyone presenting tomorrow because it's Good Friday, and therefore I think the market's actually closed, or maybe it's at least a half day. But on Monday, we'll see. We have a bad buy signal bar above today's high, and therefore I still think we may have to go a little bit lower. All right. Thanks everybody for tuning in, and I hope everyone has a great rest of their day and rest of the weekend. Talk to everybody soon.